What's going on, everybody? Gonna let a couple of you pile in here, and then we'll get started. What's up, Mike Porter? Got a couple of things I'm going to go over today. We have a pretty interesting week. A lot of news coming out. A lot of stocks that are moving around pretty crazy. Crypto's been on a pretty wild tear as well, so we're going to cover all of it. Anyone who's watching on other platforms, make sure to drop some comments here in the chat. I'm going to be watching and answering your questions. So without further ado, I'm going to get started. So to start things off, I'm going to kind of just go over what the overall market's doing right now. We're watching SPY and the Qs. We're pushing 52-week highs pretty easily here. So I think that, maybe this can continue. Anyways, so SPY 52-week highs. We got the Qs pushing 52-week highs. Slide to the right a bit. 1 second, guys. Is that better, everyone? Sorry, getting some... Anyways, so QQQ, which is the NASDAQ here, is pushing 52-week highs. And, it's hard to kind of pick a top on this. We have CPI coming out tomorrow morning, 1 hour before open. And, from what I'm seeing, it's going to get even crazier. So slide to the right. So it doesn't look like that on my screen. Let's see. Let's do that. Maybe that'll fix it. Anyways, so we're still pushing highs. We have CPI tomorrow morning, an hour before open. And we'll see what happens there. A couple bank estimates that came out today. JP Morgan is expecting a 3% CPI. Morgan Stanley, same thing, 3%, and Wells Fargo. The only other difference there is Bank of America, TD, and Citibank are all expecting 3.1%. Goldman Sachs as well, 3.1%. From what I'm seeing, expectations are coming out that it's probably going to be a cold CPI. And if that's the case, then we're probably going to keep pushing here. I wouldn't be surprised to see the Qs at 400. I wouldn't be surprised to see SPY pushing that 470 mark here, which would be around 4,700 on ES. So maybe we continue, maybe we don't. Maybe things come in unexpected and we actually fall back down. From my understanding and my opinion, I don't really understand why we're up this high. But, you can't really fight the momentum that the bulls have here. So we're going to keep playing the upside until things end up changing. Matthew, Tippy, good candles. Yeah, candles are looking good right now, Tippy. What's up, Brando? What's up, Duco? So next, I'm going to go over crypto. So, we've gone on a pretty crazy tear the last couple days, but today we actually had a major pullback. Maybe this does continue. I do think 50,000 is definitely within range. I don't want to say it's going to happen tomorrow or this week or next month, but I do think it could happen as long as we hold 40,000. Other than that, the stocks that you're going to be wanting to watch, if crypto does stay on this run is going to be Coinbase. That's probably going to be my top watch. Coin's, gone on a tear as well with crypto, but as it should. The setup here around 148, we have a high up here around 148.50. I think that if we break through those highs and get through 150 and crypto follows along, this has a lot of room to run. It's been beat down with crypto for a while and easily has a chance to get up in that 200 level. So, we'll see, but who knows, right? So Wednesday, we have FOMC at 2 p.m. Eastern. They're going to come out with their interest rate news. Either it's going to be a raise, neutral, or a cut. I've seen pretty mixed reviews on this. I don't know really what's going to happen. It's hard to predict that, but we'll be there to play the move. Powell is going to be right after that as usual at 2:30 Eastern, and that always brings a pretty crazy environment in the market. So who knows what's going to happen, but let's go into SPY specifically here. So like I said, we're making 52-week highs here. It's hard to try to pick a top on this, especially with the news coming out this week. So my advice would be to wait for these numbers to come out tomorrow morning and on Wednesday afternoon, and then see what direction the market's going to take. Either we push higher or we end up coming a lot lower. We have a lot of setups to the downside. Like I said, we've gapped up multiple times recently on the market. So if things do crack, I think that buyers are probably going to run, and we're going to see a pretty major pullback on things in the short term, at least, if these numbers come in unexpectedly. Some trades there, though. I mean, I think it's a little too risky to get into any trades right now. Just specifically because we have these numbers coming out. But after the fact, if things do end up start rolling over, I think that 450 on SPY wouldn't be a bad target, depending on how bad the news is. If it does come in good, I think that, we could see 470 very easily. And then maybe even, 475, 480, which is going to line up here with ES at 4,700 and 4,800. The all-time highs here is going to be 48.08 on ES. So we're getting really close to all-time highs. Don't ask me why we're there. I don't expect this to really keep going unless this inflation news and interest rate news ends up coming in pretty good. So other than that, I do think that probably the same is going to apply to the NASDAQ here. We're so close to all-time highs, and maybe things continue, maybe things don't. It's going to be hard to say. But like I said, after the next 2 days, we're going to have a lot better idea of what's going to happen here. Duco, 320 for SPY Wednesday, end of day. That's a pretty crazy expectation, but hey, who knows, right? Furthermore, so I'm going to go into a couple plays that I'm going to be looking at for the following week, maybe 2 weeks. So something that I noticed today was NVDA. We did sell off today. What was interesting is actually the NASDAQ was pretty strong, and a lot of the tech stocks were, at least some of the bigger names, were weaker today. But NASDAQ, there was some news that Citibank came out with a 30-day catalyst watch on NVIDIA. So I haven't really heard that much before, but it sounds like within the next 30 days, there's going to be some sort of news that we should probably be paying attention to. So if we do end up breaking over 475, I think that this probably has a chance to start moving back up to that 500 all-time high. 509.17 is going to be the actual all-time high there. So who knows? If this catalyst comes out good, I could completely see this going past those all-time highs. We've had a pretty decent pullback, kind of relief setup here. So 475, 480 is going to be that first level we need to get through, and then 490, and then obviously that big number 500. So If we start getting through there with some momentum and the market stays strong with the news that's coming out, then, who knows how high this can go. I wouldn't be surprised if this got to 530, 550, even 600. With all the AI news still coming out, NVIDIA is leading the charge on that. I expect this to keep going as long as the market does. Yeah, so NVIDIA is going to be one of my main watches there. Then Tesla, as usual, for you guys that know me, I really love to trade Tesla. Brings a lot of volume, a lot of volatility as well. But this yearly downtrend is almost spot on. We've hit it 1, 2, 3, 4 times here, and price has really just done nothing since pretty much the beginning of November. We've sat in this range here between 230 and 250 for a while. Like I said, if the news comes out good tomorrow and the next day, this is primed for a move to the upside. Tesla's not going anywhere. Tesla's not going to go to zero. For y'all that know Tesla well, it's leading the charge in the EV sector. If we do break this downtrend, that's going to be the first indicator that sellers are now losing, and those shorts are probably going to start getting squeezed out as long as the entire market doesn't end up rolling over. If that's the case, we do have a very small setup down here with a small gap from about 230 to 225. Not my most ideal setup that I'm going to be looking to trade, but if we end up breaking the downtrend, to me, that's a pretty A-plus setup. I think it offers a really good swing. I wouldn't be surprised if we ended up getting to 300. I'm not saying we're going to get to 300 by the end of the week or at the end of the month. Probably into the first quarter of 2024, if things continue how they are. 300 is definitely not out of the picture. So if we end up falling back, like I said, 230 to 225 is probably going to be the area that I would like to trade for the short term. If we keep falling under that, it's not going to be the most A-plus setups, just because we're going to be sitting in this range here from about 220 down to 200. So as long as things can break to the upside and continue, I think there's some really good trades there. What's up, Jay? What's up, Stickman? Next, so I went over coin briefly. This is really just a simple momentum play, but you need, if you're looking to trade this, you definitely need to be keeping an eye on crypto. I went over Bitcoin briefly there, like I said. We're pulling back now to 40,000. It wouldn't be that hard for buyers to kind of step in here and push things higher, but who knows? Maybe we go stagnant for a little while, or maybe we keep falling. But like I said, you need to pay attention to Bitcoin specifically for coin to continue. Another variable that could play there is if crypto does continue to run and you see that Coinbase is actually slowing down, that may be the time to start looking to either sell your long position or maybe even flip short. We've gone on, from the beginning of November to now, about a 50% run. So that's a pretty big move for the stock. But again, it's pretty tied to crypto. So we will see what happens. Sam, help. Yeah. So I'm Ethan. I'm taking over for Mr. Quench today. So yeah, I'm going to be looking for this to the upside, probably through 150, as long as crypto continues and that volume stays there on coin. My next watch is going to be BA. This has gone on a major run, along with a lot of the defense names. I'll quickly look at Lockheed Martin here. This is gapped up pretty significantly here from about 393 up to 450. Lockheed just doesn't really have that normal volume that you're going to see on BA when things get hot. So there's been a lot of news recently. Today specifically, though, they actually got a new COO. So that was another reason for this to continue. We're up about 1.38% today, but from 180 all the way to 250 here in about 2 months. Pretty wild move. I'm going to be looking to maybe try some momentum here. Again, this is very extended. So if it continues, great. If not, then we'll look elsewhere. But I think this is a name that you should probably pay attention to in the short term. especially with everything that's going on in Israel and Ukraine and all that. These defense names are going to have that volume when times of war come around. So let's pay attention to that. But that's about all I have here. So we're going to move into smash or pass. Haven't done this one before, but I would expect you guys to have some tickers ready for me to go over. If not, then I can just kind of start running through some different tickers here and tell you guys if I like them or not. Just kind of a little charting session here before we get into some a little bit of psychology stuff. We're kind of going over how we end the year. So I'm going to look at the chat here. If you guys have any tickers, more than happy to go over that. Snap. All right. Snapchat on a run here. So this is actually something I was looking at back this summer. I don't know really who's in the audience here, but Snapchat, for people who do use it on a frequent basis, Snapchat has had a lot of influencers come over. They've actually hired some people from Microsoft on the marketing and AdSense space. And like I said, if you guys that use it, there's a lot of influencers coming over. And if you notice the amount of posts that these influencers are posting is drastically changed. It used to be 1 or 2, maybe 3 snaps a day, and now it's upwards of 20 to 50 story posts a day. But the reason they're doing that is because these influencers are getting paid by the ads now, a lot more than what they used to. So from what I've heard, these influencers are making a ridiculous amount of money on that. But if they are, then Snapchat is as well. So in the long term, I do think that Snap has a chance to continue. Is it something that I'm going to want to trade short term? Probably not. I don't think that they have the volume that I'm going to be looking at least on the option side. But looking at a big time frame chart here, let's just back out on a 10-year chart. This thing was up at $80 back in 2021. So for it to drop all the way down to around 10, now sitting around 15, I think there's a lot of potential for this to maybe get up in the $30 range. We're starting to break out of this pretty small resistance here, in the short term. But right here at this $15 level that we're actually above now, I would say that that's a good spot for maybe things to break out. Even 14 looks pretty good here. But, $14, $15, we're now above that. We do have a gap here from an earnings gap down. It looks like this gap will start around 1655 is going to be the start of that gap, simply because that's the most recent high here. And the low of this candle here is going to be 2171. So about a $5-$6 gap there. I think that offers a lot of potential there. Let's move on. Visa, let's check it out. Visa's been moving really well. Looks like we're up at 52-week highs, possibly all-time highs. Let's back out on a bigger time frame here. So yeah, all-time highs here on Visa, which is pretty interesting to me. Visa is not something that I'm going to be trading day to day, but from what I know, considering how bad the credit card debt situation is right now, I don't really know why these are continuing to move higher. Yeah, maybe we end up going up to 260, but for me, I'm going to be a little hesitant on these breakouts simply because of how bad the credit card situation is now. I mean, we are over $1 trillion in credit card debt, which is much higher than 2008. Looking at Discover Card here, we're down from highs, but still, I mean, decently strong considering the problem that we have right now. MasterCard, same thing, almost pushing highs here. So maybe there's something I don't know, but that's going to be my opinion on that. TMF, what's this? ETF. Don't know a whole lot about this. Looks like the 20-year treasuries. Do I want to go long on this? I don't know. You know, we're sitting at lows right now. And again, I'm not super familiar with these 20-year treasuries. I'm going to have to go pass on that one. I'm going to go pass on Visa as well, but smash on Snapchat. AUACXP. Cools, I don't know what that is. Oh, ACXP. Okay, let's check it out. Pharmaceutical company. So it looks like a penny stock. It's got some news recently and some volume. If you want to give me a little bit more insight on that, I'd be more than happy to go over that. But for my style, I'm not really going to be looking at trading this penny stock, especially a pharmaceutical name. I can look at the news real quick here. Looks like earnings came out okay. But yeah, a lot of news back in October, 10/9/23. But other than that, looks like volumes died out. Not really something I'm going to be looking at specifically for a day-to-day basis. But next, Stickman X. Steel. Yeah, so I mean, steel looks like it's doing okay in the short term. Let's move down to a 1-year chart here. Pretty good gap up here. Looks like they did okay on earnings here. So we're still running. Do I want to chase this run up? I don't know. But I don't want to fight the trend. So I'm going to probably go smash on that one simply because it seems pretty strong. Haven't seen any significant news in the steel industry recently, but if there is some, drop it in the chat here. Mike Porter over here trolling me. Okay. All right, Porterhouse. Cools. I've got positions on both. Look at stocks, buddy, with them. Okay. Let's see here. Shop bearish. Let's check it out. Haven't looked at Shop in a while. I kind of missed when this thing was a lot more expensive before the split. So let's see here. Let's go on a bigger time frame chart first. So, I mean, as you can see, it sold off really hard back here in 2021. It took a while, you know, looks like about a year to kind of get some traction here. But, you know, with the e-commerce space still pretty strong, you know, a lot of people are making online stores. Online shopping is still taking over. To me, it seems like it's probably going to continue. I mean, we're holding above the $70 price level right here. I think if it does hold over 70 and then start moving up above 75, I think you could see a decent move there. I'm going to throw a quick little study on for you guys that use Thinkorswim. You could use this as well. It's called Volume Profile. So check this out. So when I'm trading and I'm looking at these bigger time frame levels here, I want to see low volume in the areas that I'm going to be trading. Simply because if you think about it from a money aspect, when there's high volume, you see a lot of movement. That just means a lot of money is washed around. There's a lot of positions in those areas. You're usually going to run into chop, and that's kind of what you're seeing. When things chop up, there's a lot of volume moving in and out of the stock. When volume is low, when you're moving up into a low volume area, that's typically where you get some pretty solid squeezes. So, price didn't do a whole lot here. We kind of moved right down through this level from about 80 to 100. So we start moving over 75 and 80 on this. I don't think 100 is out of the picture. Could probably continue. So that's going to be a smash for me. Let's see what else here. Shop. First time seeing your face, Ethan. What's up, Sam? Double bottom on your F. Huh. EDU. Let's check it out, Porter. EDU. Let me take this study off real quick. So, yeah, EDU, not super familiar with the name, New Oriental Education. Looks like we sold off really hard back here in 2021 along with other things. So, could it continue? It looks like it's pretty strong. I haven't heard any specific news on it. But I'm not going to fight the trend. This isn't something I'm going to be looking to short whatsoever. Looks like an overseas name. So personally, probably not going to pay a whole lot of attention to it. But I do think that with the strength you're seeing here, it probably could continue higher. Next one, Love. Let's check out Southwest Airlines here. So airlines are in the short term, in the last few weeks, making a little bit of a comeback here. I do think that's probably going to be a little bit tied to Boeing, like we went over earlier. Who knows? So Love, it looks like we double bottom here pretty nice around this $22, $23 level. But overall, from the highs back in 2021, we're really struggling down here at lows. I think that's pretty much tied to the cost of travel right now. So, if inflation comes down, prices come down, more people are going to be able to travel, and possibly these airlines start making a move back up. Short term, it looks great, but looking at a big time frame here, it's just kind of been in this downtrend for a while now, about 2 years. So is it a long-term buy spot? Maybe. If I were to do that here, I'd probably, give it a $20 stop loss just to save myself if it wants to continue to move lower. But over time, I do think that this is probably a pretty safe play here for the upside. So for now, probably a pass for me, but longer term, I wouldn't be mad at it. Next one, Costco earnings. Let's check it out. Costco pushing all-time highs here. Not sure why a lot of people are buying in bulk right now, but maybe it makes sense price-wise when everything is a little bit more expensive than it has been the past decade. So Costco moving out. This looks like a pretty solid breakout pattern to me. Something that I would typically trade. I don't know that I'd chase it here. Maybe look for a pullback to around the 600 level, so I know that buyers are still present, and look for this to continue to maybe 640, 650. Costco is just a name. These expensive stocks typically don't have a ton of volume day to day. To me, it's more of a swing name. So if you're looking to trade it short term, I would probably advise you not to be, day trading or scalping this. But to me, swing wise, I think there's a lot of opportunity here. Simply just from a technical standpoint, this is a pretty solid breakout. I'm not seeing volume really pick up a whole lot here, but if it does, then maybe we continue. Next, UAL. Looks like you like airlines, huh? All right, let's check it out. So I'll go over Delta as well after this, but it looks like pretty much the same thing. Airlines have had a short-term bounce. Volume really isn't there, so that doesn't tell me that there's anything specific or significant that buyers are coming in and buying right now. To me, maybe it's even just guys who have caught this entire short move, kind of just getting out of their position. They're covering that position, which means they're buying back. So without a ton of volume, I can't really make a pretty solid prediction on this. If we end up rolling over, you obviously have a very nice support zone around this $30 level that maybe buyers hold, or maybe we end up giving it up. But I think a lot of this stuff, a lot of the airline stuff is going to be tied to the inflation, right? A lot of things are a lot more expensive right now. Food, airfare, tickets, all that. So you may also want to take a look at oil, and I'll cover that here in a second as well. But all those factors are going to tie into the airline space. Very big move, like I said. So this relief bounce isn't very surprising to me at all. Does it look like real buying? I don't know. I wouldn't be too sure to go long here for the short term. If you're kind of looking at dollar cost average into this to hold it for a little while, I don't think it's a terrible spot. Obviously, there's a massive pullback here from COVID, so still a lot more room to go on that. What's next here? Short on Walmart as well. Let's check it out. So Walmart had earnings recently. I think they did okay, actually. I don't know why they're pulling back here that much, but, they've gone on a pretty big move this year. Not super big, but, 140 to 170, it's not terrible. Walmart's just kind of, that slower, safer stock. So you're not going to see those drastic moves in it unless there's a massive economic play where everything's moving together. Do I want to go long here? I don't know. It doesn't look like a terrible spot. I mean, as you can tell just from the chart, you're going to see 150 here acting as some sort of support. And we're coming down and testing that right now. So honestly, I wouldn't be mad at going long here. So I'll probably go smash on this, but have a very tight stop. I'd probably have a stop at, 145 is kind of pushing it for me. But that's kind of that last spot here for a short-term low that you could use as a stop loss. And if buyers come in here at 150 and, we move to highs, I think that's very doable. We're coming into the end of the year. Obviously, there's a lot of shopping going on, but you're going to see those numbers come out in Q1 of next year when Walmart reports their Q4 earnings from this year. So not a bad spot. Honestly, I'm going to probably disagree with you going short right here, unless you've been short from, around 170. Other than that, I don't think that this is probably a short play for me, but let's see what else. Stickman, this is typically the time cruise lines have more business. Yeah, that makes sense. So let's check some cruise lines out. Let's do Carnival. Still way down from Corona. They haven't really recovered all the way, which to me is a little surprising. But if you think about airfare tickets also being expensive right now and those stocks are down, it makes sense that these are still struggling. Do they come back? I think it's very doable. I don't know when. It's probably going to be a long-term trade there that I'm not really going to be that interested in. Next one, Mike Porter, NNDM. Ooh, this is a cheap one, $2.26. Short, not a lot of volume on this, not a lot of movement, Mr. Mike. So I'm probably going to stay away from this one. I don't really want to, right? Yeah. Porterhouse over here probably messing with me, but yeah, not looking to pick up 5-10 cents here on a move. So I don't want to move around 100,000 shares. So let's see what else. I didn't go over Delta. Let's check that out real quick. So Delta seems to be actually one of the stronger names here. So for you guys that are looking at going long airlines, it looks like Delta's going to be that the strongest one. Check out JetBlue real quick. That's probably going to be in second place, considering looking at that's pretty close to Southwest. UAL as well. So yeah, Delta looks like it's going to be leading the charge here. So if you guys want to go long airlines, it looks like Delta is going to be the one. Next, HD. All right, let's check out Home Depot. Moving really well right now. Let's go on a bigger time frame here. So short term, the last, 5-6 weeks, done pretty well. Still off of our all-time highs. We had highs of about 420, 415 area back in December of 2021. Other than that, we've just been completely sitting in this box here. So for me personally, if I'm going to try to trade this, I'm either going to look for a rejection here around the top of this consolidation zone, or if this ends up breaking out and holding above this 350 level, that's where I'd be looking to trade it. But, a Home Depot isn't a crazy high volume tech stock, right? So the technicals on it don't mean a whole lot. Yeah, they're there. Yeah, they have a little bit of significance, but, you can't really trade technicals that well on consumer stuff like this, just because it's going to tie into a lot of the economic factors that are going on. For me, yeah, just probably going to be pass on this for now. until it shows me that it's ready to make another move higher. But maybe there are some little swing trades here, kind of playing the tops and bottom of this zone. Next, hood going to pull back after recent rally. Let's check it out. Robinhood's IPO price was, let's see, it opened at $38 a share, and we're sitting around $11.80. So we're still not anywhere near that IPO price. It's had a decent rally here. To me, hood's just not going to be something that I'm going to look to trade on the short term. But until they really kind of restructure their business, I don't know that I see this really moving that much higher. I'm really seeing some crazy growth out of it, especially after the whole GameStop stuff, when they wouldn't let people sell and kind of bailed out the big guys. I don't know. They advertise the free commissions, but for you guys that do use Robinhood, like I said, they advertise the free commissions, but you're going to get terrible fill prices on that. And that's where they make their money on the back end that they don't necessarily advertise. So for anyone that wants a short-term trade on Robinhood, I highly recommend you move to a different platform. Nothing wrong with long-term holding or couple week swings being executed on Robinhood, but short-term, definitely move away from that. Well, that's all the tickers I'm seeing. I hope I covered everything for you guys. Let's just quickly check out oil here. Something else that I was eyeing is going to be Exxon. The recent news that I've seen is the Saudis are actually going to cut supply coming into Q1 of next year. And that news came out about 2-3 weeks ago. So maybe even 5 weeks ago. From an economic standpoint, that doesn't make sense that oil prices are coming down, from what I know. If you cut supply, prices typically go up. So we're around this low kind of support we've made around this $100 level. I've been talking to some guys that are in the chat with me as well, some other analysts, and we're talking about maybe crafting up a play here for a short term, maybe month, 2 month upside swing here on some calls on Exxon specifically. But I think that all of this, all the oil sector should at least have some sort of a bounce. Nothing's guaranteed, but from the sell off from 120 all the way down to around $99 to $100 a share here, it's a pretty decent drop in about 2-3 months. And like I said, with supply being cut, I don't see prices coming down. I don't know, you guys in the chat, have you seen oil prices come down at the gas pump? I haven't seen any sort of movement there, but maybe I'm wrong. But I don't know. That's another trade that we're looking at possibly taking. So for you guys in the Discord, be alert on that. Yeah, Stickman, who didn't see that coming, right? But let's see here. That's about it for my trade ideas. So if you guys have any questions, feel free to ask away. If not, I'm going to kind of go into how you guys may want to wrap up the year. I'll wait around for about 30 seconds or a minute for any questions. All right, well, I'm not really seeing a whole lot. So let's see. So yeah, we're wrapping up the year. For you new traders, I have a couple things that I want to go over with you. Hang on, here we go, Duco. DVN and MRO. Okay, a couple more tickers. Let's go on that. Let's see. We'll start with DVN. So about $44 a share. Pretty solid downtrend here, like you said. You might be able to draw a little downtrend like that. Not the cleanest thing in the world, but yeah, so energy is down. So usually energy is going to, so XLE is going to be the spider ETF for energy, and that's going to be down, which is expected. And then XOP is going to be oil, and they're usually going to be pretty tied together They almost look exactly the same, but let's go back to Devon Energy here. So doesn't look bad. I mean, oil and energy are typically not a technical trade. It's doable, and maybe there's some short-term trades there on the technical side. But if you're looking for a kind of a macro play here, you need to kind of wait for some of that macro news to come out. You usually can't use a trend line to execute these trades effectively. But yeah, I mean, solid trend line here. If we end up breaking above that and then pushing through this $50 level, I do think that would work. It looks like we're kind of bottoming out here, which may be a good sign to enter. I mean, I think this could be a smash. I think it just depends on how it moves here in the future. And for me to trade this, I'm going to need to see a breakout around this area, right? If it just goes flat, then I may, cut the position or take a break-even stop loss, or maybe even just a small loss. If I was going to hold it, I'd probably give it around a $40 stop loss. If it broke under 40 and started closing on some bigger time frame charts, that's kind of where I would start getting out. But that's just me. But like I said, usually oil and energy aren't going to be a technical trade. MRO, let's see. Marathon Oil, yeah. So same thing. Energy and oil are going to be usually very, very close together. So same thing. Solid downtrend here. Possible bottom. It's hard to tell. A lot of these names are all kind of lining up. They all have some support areas that they're coming into, and we've seen them bounce out of these multiple times. I mean, you're going to see this on Exxon Mobil as well for the one that I was looking at. I mean, all this stuff is lining up at supports here. So if we end up seeing these supports get taken out, we possibly move lower. But if buyers come in strong enough, then I think it's an easy spot for things to bounce. And again, with that news that I told you guys about with Saudi cutting supply coming into next year, typically that would mean a bounce on this stuff. BRCF, let's see. But I think overall, I'm going to lean toward a smash on oil and energy. Not seeing anything pop up for BRCF here. So yeah, it looks like about it. Okay, cool. So so I'm going to wrap this up with just a little bit of trading psychology, especially for the new traders here. This may be your first year, second year, third year, whatever. But it's always good to look back on your year and see how far you've come. If you haven't made changes and you haven't gotten better, then you definitely need to look back on things. Let's see what else. As a novice options trader, do you suggest relying mostly on price action for plotting entries? Currently using stocks for the indicator. Yeah, so KGOs. For me personally, I'm more of a technical guy. I think that you need to understand price action at a basic level, regardless of what kind of trader you are. If you're a guy who typically just trades macroeconomic news, you still have to have a basic understanding of what the chart's telling you. Because every day, regardless if it's me or anyone in this chat or any trader, you're going to show up and you're going to have some sort of a game plan, right? And every day, your plan is not going to actually happen. There are times when, obviously everything's going to go perfectly to plan, but typically nothing is going to work 100% of the time. But as long as you have some structure there and you understand what the chart's telling you on a very basic level, you're going to have an understanding of, okay, is the chart moving right? Is the chart telling you what I want to see? Because you can't plan something out candle by candle. You have an idea of what you want to see, right? But you don't actually know what's going to happen. So your job is to react to what's going on. So as long as you have a basic understanding, like I said, you're going to be able to kind of read it. It's kind of like learning a language. You have to understand what the volume's telling you, what the price action's really telling you. But if you just know it as a green or red candle, or there's an upside or downside wick, that's not enough. You need to understand it from a very fundamental level. The way that I teach it in the chat room is you have to understand it think about it as money being flowing around. There's buyers trying to push things up and sellers trying to push things down. If you see something coming up to a certain price and you see price continuing to get hit back down, well, then you know that sellers are constantly trying to push it down. And then you have chart patterns and trend lines and all that, but you can't specifically trade off that stuff. You need to have another understanding of what's going on. So I hope that answered your question there. But back to the psychology stuff. For you new guys, I mean, the first thing I want to go over, it's not all about your P&L for the end of the year. Some of you guys may be red, some of you guys may be green. Some of y'all may have blown accounts and quit and came back. Maybe some people in here have quit and haven't come back yet, or maybe you had an extraordinary year. But especially for you new guys that are, aren't trading millions of dollars, P&L isn't going to be everything. I think looking back on how far you've come from January 1st till now is going to be, the biggest thing. I preach that people journal what goes on every day in their trading life, from entries to exits to what they were thinking to their game plan, all that. And if you, look back on what you were writing down at the beginning of the year, you're going to see a big difference. You're going to see how you've changed mentally, how your strategy is different, the kind of trades you're taking. You're going to look back on how the market was then and how it was now. And don't get me wrong, the last, 18 months have been really hard for, I think, every trader. We come from that insane bull market post-COVID, and then we come right into a bear market. And a lot of new traders came into that bull market, and it was pretty easy to make money. And you get hit by the bull market, you really don't have a full understanding. Maybe you've never even seen a bear market before, and you get chopped up a bit. So, full transparency, it definitely wasn't the easiest thing to trade. It was a very hard market to trade. I think everyone kind of got beat up. But if you can learn to survive and maybe even make some money in a bear market, when that bull market comes around and you've taken all those lessons and hardships during the hard times and survived, then you're going to be that much better when you get that bull market. So I would start looking to plan out your next year. I write down about a full page on how I did for the year and what I'm looking to change coming into the next year. Whether it's I need to change my strategy, I need to change my position sizing, what I did good, what I did bad, what I'm looking to do better next year. I think a lot of people, typically new traders, are going to come in and they're going to want to set some sort of money goal. And sometimes that works, but most of the time, from my experience and seeing other traders kind of go through the same processes that I've gone through, if you set those money goals, like I need to make $50 a day, I need to make $200 a day, I need to make $1,000 a day, whatever it is, that's typically where you're going to end up, making a lot of mistakes, creating bad habits, because you may be down typically what you could make in a day, and that's a perfectly fine way to end the day. If you usually make $100 and you're down 100, usually the worst thing you can do is start trying to revenge trade and try to make that money back to meet your daily goal, because you want to make X amount for the week or the month. And that's where you're really going to start struggling, is because you're going to start kind of death spiraling. You're going to try to make that money back. You're going to revenge trade, and you're going to deal with, blowing accounts, or, digging yourself a hole that's going to take months to get out of, maybe throwing 6 months of profits, out the window. It happens to new guys, especially. But if you could take my advice here, it would be, I like to tell people, look for about 1% a day. People with very small accounts, I see it all the time in the chat whenever I'm live trading. People make 5, 10, 15% of their account, and that's great. And again, it's a small account, so those gains are reasonable on a small account if you're trying to really be aggressive and really try to grow that account. But if you think about bigger money guys, and yes, they have a lot more money, but if you can make 1% a day, and then you really slow down, and one of the biggest problems new guys have is they're going to try to go in with, especially with a small account, they're going to go in with half their account, half their money, right? You're basically putting half your chips in for one single trade, And if you take a 10% loss on a 50% position size, you're going to lose 5% of your account. If you lose 50% of your account, you then have to make a 100% gain on what you now have to get back to break even. So if you can just look for 1% a day, and if you guys actually implement that into your trading this next year, it's going to feel really slow. And I get it. I started trading and I wanted to make all the money in the world, and you quickly learn that that's not going to happen. And most new traders actually end up having that early success, and then they kind of end up spiraling out of control. But if you start looking for 1%, that probably means your position size is going to come down, which it should. And you're going to take these trades and not be so emotionally invested in them. You're not going to be, tapping your foot or nervous or anything like that. It's going to make things a lot simpler for you. And you're actually going to end up thinking a lot more logically. You're not going to think emotionally about every trade. You're not going to start getting hope when things go against you, or greed when you're way up and you don't take profits, because that's where things get messy. If you narrow things down to a smaller position size, or even just start the year in a small position size, if you've had a tough year, get that momentum behind you, get the basics down, and you'll do better. What's the ideal position you buy? Any tips? Hari, a lot of it depends on the trade for me personally, but I'm not going to go in with anything, more than 10% of my account, the very, very most. But again, it depends on your account size. I don't have all my, eggs in one basket or whatever. So I'm not trading my entire book at one time in one account. So if you guys are typically losing a lot more than you want, and let's say you have 10 grand in an account, and you've blown accounts before, well, put 5 to the side, have 5 in that account. So no matter what, if you freak out one day and go in with your entire account, you're actually only going in with 5,000 rather than 10,000. That doesn't mean you can just throw that money away and think that you have that extra 5,000 on the side to make a new account. That really should just be a buffer for you, and it'll force you to keep those position sizes smaller. Give me 1% a week or a month and I'll be better off than I have been. Yeah, you could usually S&P's around that 10% mark a year, right? If you can make 1% a week, that's going to be a 50% gain. Then you can also add the exponential gains on top of that. So slow down. A lot of you guys want to double your account in one day. Yeah, of course it's doable. But you can do that at a casino as well. You have to treat this like a business and not a way to get rich really quickly. So, but I like to say this to new guys as well. Break things down into weeks or days. $400 a day is $100,000 a year. There's 250 trading days in a year. $400 a day is $100 grand a year. For you guys that do have a little bit bigger accounts, and you're typically making, $5,000 a day, $1,000 a day, whatever it is. And you're seeing your equity curve kind of freak out and go up and down, and that's not healthy. Size down and look for $400 a day. And 200 would be 50 grand a year, right? So it's not crazy if you just look at it in a long-term perspective. And stop trying to be green every single day. Try to be green for the month, or just try to be green for the year. Every day isn't the end of trading, right? There's always tomorrow. So yeah, try to kind of write some things out, what you want to work on for next year. For you guys that are in the Penny Boys, I'm always around. All the members are always around to help you guys out. So you can always reach out to me with questions, or maybe I could put you in the right direction on what you should work on for the next year. Or whatnot. So other than that, guys, that's probably going to wrap up the stream. If you guys have any last minute questions, I'd be happy to go over them. If not, then we can get out of here. Just started journaling this past month after I took a hiatus from trading. It's been somewhat helpful. Definitely working on keeping emotions in control. Yeah. Controlling your emotions is something that every single trader in the world deals with every single day. The way to combat that is to have a very strict plan, have very strict rules, and everyone's going to have different rules, usually around the same, right? Every trader typically has, the roughly the same risk management rules, but you're going to learn those from mistakes. You have mentors like me and everyone in Penny Boys that are here to help you, and we've made those mistakes, and we want to see you guys succeed. So if you actually take our advice to heart and try to implement that stuff, I promise you it's going to help you. But typically you have to make those mistakes on your own, and you'll learn from them. But as long as, until you fix those mistakes, nothing's going to change. But, that goes for everything. Mind me asking how long it took you to be successful. So I've traded just about 5 years now. I would say it took about 2.5, maybe 3 for the ball to really get rolling. Typically I've worked at some day trading firms before, and they typically put you on about a 4-year path, kind of like getting a degree in college. They want you to show that you can actually survive and make money for 4 years before they put you on that commission. You're going to get a very small salary for those 4 years. And then, like I said, if you prove yourself, that's when things can really take off. If you really know what you're doing and they give you the capital to do that. So everyone wants to try to be a trader, right? Until they show up. And, like I said, most new guys have that early success. They end up making some money in the beginning, and they think it's easy, and they think that, they're born for this. And that's just not going to be the case for anyone. It's going to take years. It's, to be a doctor, you got to go to school for 8 years. If you want to be a professional trader and you think you're going to do it in 1 year, it's just not going to happen. And simply because the market's never the same. The market's not going to be the same from 1 year to the next. And a lot of you guys that have traded for over a year now have seen that. And, but that's where you're going to make those mistakes and learn from them and get a lot better. What else we got? That was a good question. All right. Well, if there's any last questions, ask away. Like I said, if not, then we can get going. But just some reminders here. CPI tomorrow, 8:30 Eastern time, 1 hour before the open. And then on Wednesday, we have FOMC meeting at 2 p.m. Eastern time. And Powell at 2:30. You're echoing a lot of what I'm feeling. I'm a perfectionist and I'm hard on myself. Yeah, but it's good to be hard on yourself, K-Goes. As long as you journaling, like I said, is going to be big, and it seems like you just got into that, and that's really going to help you a lot. I promise you. So keep working. It's going to take a long time to be a professional at this. I mean, think about being a professional athlete. And I like to say that this is somewhat of being a professional mental athlete. Because every day is different, just like every NBA game is different, every NFL game is different, and whatnot. So keep working. Duco, you trading market open tomorrow? Yes, I am. I will be there. I'm excited. I had to miss Thursday last week for some school stuff, but I will be back tomorrow morning. And starting starting next week, I believe, I'm going to start doing Monday live tradings as well. So Monday, Tuesday, and Thursday mornings, I'll be live trading. And then my normal lessons Tuesdays and Thursday nights. So I hope you guys are there for that. So you guys are going to get an extra day with me starting next week. But yeah, K-Goes, thanks for showing up. Thanks for the good questions, guys. I think things are dying down here. So I'm going to wrap this up. Thanks for coming, everyone. I'm glad I got to pop in here for Austin. It was fun. I hope I get to do this more with you guys. And that'll be it. Take care, everyone.